Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about one of the companies for which a lot of demand had come in for a video, and that is Indiamart Intimesh, and whether you should buy this company at around 2300, 2400, or you should avoid it. So let's understand about it. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and this is purely for education. Before I start with the analysis of Indiamart Intimesh, here's a small request that kindly support me through Patreon, and I thank all the patrons who are supporting me there. I will make better videos there, help you in market companies queries, one-line answers, and the patronage starts at only $2 a month. That's 150 rupees a month. Once I have more than 200 patrons, I'll definitely start with an education course on investment for no additional fee. For detailed stock queries or detailed, you say, company analysis, etc., you can contact me on email. Also, you get access to exclusive articles and videos before YouTube. So many videos, some of the videos I have already put in about Reliance Facebook deal, etc., that came in on Patreon before it came on to say YouTube. So you get access to a number of exclusive articles with respect to stock analysis, price targets, etc., which I feel is right. So my personal opinions on many of the stocks you get there. So the range is between $2 and $10. Kindly visit there. Now about Indiamart Intimesh, established in 1996, it is one of the largest online wholesale platform or wholesale selling platform. It is not a retail selling platform, and majorly they sell products of office usage in bulk. So they sell like boards, chalks, pens, markers. You can say those boards which use digital material, and other products of like papers or packaging, etc. Many products, tapes, and so on and so forth. There are a number of products which you can say that is being sold with respect to whatever that is office related. So Office Depot in US, so you could say Indiamart Intimesh in India. Market cap of around 7 8,000 crore, 9,000 crores. It is an illiquid stock, so it moves up extremely quickly, goes down very quickly, and all that. Company is stable and good. It is pretty good. It is not that there is an issue with the company, but I'll put you in detail later on in this presentation whether you should go ahead and buy or not. So if you look at the financials of the company, then sales went up by around 30% in the December quarter compared to last year, 31%. And look at the profit growth. From 28 crores, the profit has just skyrocketed to 63 crores. So 190% increase in profit. It is a completely debt-free company, high promoter and high institutional holding. So there's no question of promoter holding being low, so there is some circumspect and everything else. The return on equity is good. It is quite decent, strong at 20%. Operating profit margin is even better at 26%. So all in all, looking at the numbers, it looks a top class company, and probably that's why the valuations, which is slightly higher. So if I go on the performance of the stock, so the stock is up 61% from its IPO. In fact, it is up even more. So it is up nearly 100% from its IPO price. Went down around 35% from peak of February. So it went from 2700 all the way down to 1700 levels at the end of March, and then buying has come in, so it has recovered smartly from those levels, and in fact it is up 30-35% from those 1700 levels, currently trading at 2350, 2380. They have produced strong numbers as we have seen already, so we could expect that when normalcy comes back, the company would perform even better and should be able to do better because they do online sales. So All this combined with consistent growth that has already been seen in IndiaMart Intimesh earlier, we feel that the company is set to do even better once things again normalize. But the problem is it is trading at 55 times earnings. Yes, the growth was around 130% that we saw in the December quarter, but will that growth sustain with the kind of a situation that India is going through economically? I think there would be issues because many of the businesses are shutting down, and many of the businesses, even in the education sector, are going online. They might not be requiring so much inventory with respect to for their schools or for their offices, etc., since the offices are closed. So if you take that perspective forward, the sales of the companies could suffer going further in the next 2 quarters. At least for this June quarters, it could look very ugly in terms of numbers, and even I guess for the September quarter it might not improve a great deal compared to September of say FY20. So FY21 could be extremely difficult for the company, and that is why I feel 55 times is expensive. If things were normal and it would have been trading at even 60-65 times, I would have said you go ahead and buy. But I think there could be some sort of trepidation in the stock, some sort of you can say correction in the stock, which I can foresee over the next 3 to 6 months. So why I believe it is an avoid? It is a little. They'll get very little business this quarter, maybe no business this quarter because of the things that I have already mentioned. Because of many institutes that are shut down, many offices or government offices that are shut down, and they require a lot of filing and paperwork, etc. And so a lot of see almiras and other fixed assets are required for these offices, but the offices are closed. There is no new inventory that would be required by the companies. It has not corrected, so it did correct to 1700. If it was at currently 1700, 1800, I would have said that it is not an avoid but a buy at those levels. Another thing is Reliance may just take over the space. So what has happened is Reliance, with its tie-up with Facebook, could get into anything now. It could get into online sales of all these office products. It could get into online sales, of course, of garments and you can say fashion products through Reliance Retail, and they could just increase that ambit even further. So will IndiaMart be able to sustain that sort of competition that Reliance may put up? So these things are critical in order to analyze a company when you are investing for the next 8-10 years. Near term pressure as global problems would continue, so any export that they wish to do or anything with regard to that, there would be issues in that. So Q1 looks a washout, but even going further, I would say even Q2 seems to be under danger. So one needs to be extremely careful buying at 23-2400. Yes, it could go up and it could go up to 3000. We don't know that. Maybe there could be a the totally turn of events and the stock keeps going up, but my knowledge and personal opinion is that we could see a correction of around 15-20% in the stock from these levels, and that would be a more reasonable level to look at the company. If you look at the technicals of the stock, then technically it looks stable. So 1700 looks strong long-term support. Has moved in uptrend after passing through 2250 that we have seen as the 50 DMA. There's low liquidity of shares, so there could be movements up and down. So technical levels might not sustain that much, but 1700 looks a very strong support on the downside. You can buy on major declines if possible below the 2000 levels, but not at these levels. It may see correction soon. So it may see correction going forward. So I believe that one can wait and probably buy on major declines rather than buying at 2300, 2400 levels. So what needs to be done? In my opinion, you can buy below 2000. In fact, you need to buy only below 2000. Wait for correction, and probably in the next 3-4 months time, you will see correction in these types of stocks, these high flying stocks, whether it's IndiaMart, DMart, or other kinds of consumer companies which have run up appreciably. But keep on buying, but over the next 3 4 months you'll get very good opportunities. You avoid if you don't have. So if you don't have it, do not get into it at 23 2400. That's what I'll do. I'll never get into something like that at 23 2400. uh, have a good 4 5 year view. If you have it at say 2600, even if you have it at lower levels, wait for 4 5 years. This company will do really well in the long run. That is my opinion, and will outperform once things normalize. So things, whenever things get better, and probably in the next 4 5 months, I believe that the picture would be much better from the Indian economy point of view, and then the stock would really outperform. But in the next 4 months, you'll get different opportunities, 15 20% downside. It could go up, down, and major volatility. So if you can handle that volatility, probably you can buy now and just sit on it for 5 years. If you can't, then wait for major declines whenever it happens, 5 7% from these levels, and then get into the stock. And always have less than 5% exposure into the company. So this was my video on IndiaMart Intimesh. Please like and subscribe my channel and hit the bell icon so that you can get my video straight away when I post it. And kindly email me if you have any queries, and support me through Patreon. Thanks a lot for watching.